Hey, it's Ted McGrath. Welcome to today's show. So I'm going to jump in today. We're going to talk about MSTR, some new price targets from Citibank on this. I'm going to jump into BMNR and share a little bit about what they're doing with their strategy and how BMNR price targets are looking pretty good from some different analysts, just giving you different points of view on this and whether or not the Q4 bull run is still intact, or is the cycle different, and are we moving on to something that's a little bit of a new space right now? So we'll take a look at that as well. Not tax advice, not financial advice, not legal advice. I'm also going to share with you my a little bit about my 5% per week trading strategy, where even when the markets are down, and I know it's tough for people right now and it's no fun to wake up to, how one can still be cause over their financial situation and win. So I'm going to share with you how I'm doing that as well. All right, we're going to jump in right now. If you want to go get a copy of my new book, Money Game, you can get it for free on the link down below. And then if you're also interested in how I'm trading and making 5% on average per week, when you download the book, then there'll be an opportunity to find out more about how we can help you and give you some data and information about my trading strategy as well. Okay. So that is the story. And let's jump into what is going on right now with strategy. So big news from Citi, just initiated coverage on strategy with a buy rating and a $485 price target. Now, mind you, that's a prediction where they think Bitcoin could potentially reach 181,000, but notice how this is over the next 12 months. So I don't think anybody's pigeonholing themselves into the next 2 months on things right now, considering the cycle looks like it's been changing a little bit since we have new players and institutions in the game and not just retail. And it's been changing like this for a while. So that would be like a 63% upside for Bitcoin from here, which would be a big boost to 181,000. That's just one group's opinion. You know, it's good to see what people are saying out there, but you need to form your own opinions on things and not take what any institution or person says at face value, including me. Do your own research and figure it out. Now, their model with Citigroup says that strategy, they think it's going to trade at a 25 to 35% NAV premium. So that means people are going to be buying the stock at 30% over its net asset value. So we shall see. Now, historically, strategies trade for much higher than that. And we've seen its MNAV go up, to 2, 3, even 4 in 2024. But those days are no longer at this present time because the MNAV is super low and they're trading at a very low premium above their net asset value right now, which means people aren't willing to pay for a lot for the stock over its net asset value. So, which means the holding of their Bitcoins, right? You take their Bitcoin value, you minus out their debt, and that's their net asset value. Make sense? Okay. So as we've got MSTR in looking at their stock over the last month. Now, I'm a holder of it. I still continue to hold on to strategy. And if you look over the last month, it's fallen 11.56%. And the main culprit of this is Bitcoin volatility, amplified by a little macro uncertainty. We've got the tariff talks going on with Trump and China. We're going to have this summit coming up at the end of the month here. We have this U.S. government shutdown that's going on. There's lots of just crazy stuff going on in the world, as always, right? So MSTR is trading below both its 50-day and 200-day moving average. So when you look at the stock, I think on Friday we closed at either 289 or 287 for strategy. And yeah, 289. And that's well under its 200-day moving average, which is a $348 price point, and the 50-day moving average, a $330. So it's below that. So we know the times right now are like the sentiment's bearish. But I still believe that strategy is going to come out of this. I believe Bitcoin is going to come out of this. I believe we're going to see something happen in Q4 is my personal opinion on this. And we may extend into 2026, and we'll see what's going to happen with the tariffs and the news with China and Trump, because we know that always influences the market. And so we're going to get some news on that at the end of October. But also, we might have another Fed interest rate cut coming up as well, which is also bullish signs for crypto and Bitcoin and MSTR. All right. So we got to get strategy reclaiming those levels, and also remember, it doesn't take a lot for strategy to reclaim those levels. $330 price point. So strategy eventually, I think, will reclaim those levels. And if Citigroup is right, maybe strategy hits 485 in the next 12 months. Maybe it goes higher. Maybe it breaks its all-time high again. Who knows? Okay. I don't know what's going to happen in the future in terms of short time periods. I just know this is a sound stock. This is a sound company. They still remain the world's largest corporate Bitcoin holder with 640,000 Bitcoin. Let's take a moment and just breathe that in. Let's take a moment for Saylor. Give him a little round of applause on that one. 640,000 Bitcoin. That is no small accomplishment. So even though he's getting his butt kicked in the news, even though as shareholders we're getting our butt kicked a little bit, it's like this is a sound company, very, very sound company moving forward into the long-term future. And in the short term, it's always volatile as hell. So be prepared for that. So Strategy's financial engine, let's just revisit the fundamentals. It's running on not just issuing shares of stock in terms of common stock to collect money and buy Bitcoin, but it's using these fascinating products that Saylor has created, Strike, Strife, Stride, and Stretch, which collectively represent over $30 billion in issuance potential, which means they could issue $30 billion approximately to buy more Bitcoin. So there's lots of potential to issue these preferred stocks to get more Bitcoin on the balance sheet. As the stock goes up, we know the classic play that BMNR and Strategy use. When the stock goes up, they issue more shares in the marketplace, and then they take that money that they got and they buy more Bitcoin. So that's just the classic way. But look at Saylor's just brilliant way. Strike, Strife, Stride, and Stripes. I mean, this guy's literally created an empire here for the future, and Strategy looks good. I was talking to a friend the other day. I said, there's lots of volatility on this. I mean, we watched this go all the way down to 230 during the tariffs with April. Is that unreal that could happen again if there's bad news on the tariffs? No, it's not unreal. But then we saw us bounce back within a 30-day period all the way up, I think 30 to 45 days, all the way up to 455. So this thing moves like a rocket, and when it moves, it moves. And during bearish sentiment times, I'm not saying we're in a bear cycle at all right now, but bearish sentiment times, the MNAV of these companies gets crushed, and that's the reality. But I am still holding on and waiting for Strategy to go back up to where I will take some profits and see what I'm going to do long term. I will hold on to some of this stock long term, which is my plan right now, because I just think it's a great company. But I won't be a stranger to taking profits, and I'll keep you informed. Again, not tax advice, financial advice, or legal advice, but there you go. Okay. So the structure's allowed Strategy to expand its treasury without dilution and continue compounding its Bitcoin exposure. I know people kind of raise their hands and they're like, "Oh my God, they're issuing more shares to buy issuing more common shares to buy stock. It's dilutive to the shareholders," and it absolutely is not dilutive to shareholders. There's a temporary minor dilution on paper because there's more supply of the shares in the marketplace. But what they've been doing over the last several years with this is it's accretive. They're getting more Bitcoin per share. If you look at any of these treasury companies, like they're called DATs, digital asset treasury companies, like BMNR, like Strategy, when they're getting more Bitcoin per share or more ETH per share, it is accretive to the shareholders, period. End of story. No arguments with that, okay? Once it's done, it's done. If they do it above the net asset value of the Bitcoin or the Ethereum they're holding, and they issue the shares when it's above and it's at a premium, and they then take that premium they got for the shares that they issued in the marketplace to buy Bitcoin or Ethereum, when they did that and it was at a premium, they then made it accretive for shareholders. And when people can stamp, cry, yell, scream, do all they want about issuing shares in the marketplace and saying it's dilutive, it is accretive for the shareholders, period, end of story. Okay. So there you go. So Strategy projects a 30% Bitcoin yield and a $28 billion in gains if Bitcoin hits $150,000 by the year end. That scenario, if you just look at, what it would drive is $34 billion in operating income, $24 billion in net income, and roughly $80 per share in earnings. So Strategy, that would be a big move for them if you to see it how this company just continues to grow in terms of its Bitcoin value and Bitcoin stack, right? Doesn't mean every time they stack Bitcoin, that the stock price is going to go up at all. Again, it's a very volatile stock. It is not for the faint-hearted. If I were personally investing again, I would do it the way that I did it, which is buy Bitcoin first. I bought Bitcoin back in 2018 when it was $3,000. And so I would buy Bitcoin first, understand it, then I would get into strategy. I would make sure I understand Bitcoin first, and then I would make sure I understand strategy. And by the way, if you don't fully understand Bitcoin or strategy, I would encourage you to go ahead and go get my book, Money Game, and go pass it to a friend. It's free. Go snag it. Because like in there, it really breaks down strategy. It breaks down Bitcoin. It breaks down Ethereum. It breaks down why Wall Street's moving onto the blockchain. It makes all the terminology really simple so people can understand it. It breaks down what MNAV is, because people always have a question like, what's MNAV? It breaks down inflation. It breaks down traditional financial products. Mind you, the first decade of my life was in traditional finance. So I understand inside these companies of how it works, and I broke it all down in the book, and I compare the new world to the old world. So pass it on to a friend. If you want your father or your mother or your girlfriend or somebody to understand like what Bitcoin is, what Ethereum is, you can only show somebody really what it is, in my opinion, who's a skeptic or doesn't understand it, by showing them the problem first. So you got to highlight the problem of the current economy. I highlight the Fed in this. I highlight the money printer. I highlight inflation. I highlight that inflation really isn't 3%. So you got to introduce somebody to the problem first before you're actually going to introduce them to the solution of like, hey, Bitcoin's amazing. You should go get it. Like, here's the comparative data. Problem this, Bitcoin good. It's all in the book. It's free. Go give it to a friend and get it yourself. Also, when you download this, we'll send you out a video on my trading strategy of how I'm making 5% a week trading. I'm profitable the last 14 out of 15 weeks trading BMNR. I'll talk a little bit more about that later, but I'm crushing it. So when the market goes down, I'm adding and increasing my stack. You know what I'm saying? So you know the idea that people always talk about buying the dip? Well, when I trade, it's essentially like I'm buying the dip. You see what I'm saying? Because when I trade, I'm increasing my shares. So let's say like BMNR is down right now at $50. And even when it went down as low as $40, I was picking up a minimum of 5% a week. So I was taking my trading money, and with my trading money making 5% a week. So I was adding to my shares of BMNR. So even when the market's down, people can sit there and cross their hands and go, oh my God, the market's down. What do I do? You know, and then you sit there and you go into a sad effect. When the market's down, I'm trading, and that's the whole purpose of why I created Money Game, my community Money Game, and talking about long-term investing, but also daily trading. And so I'm trading and I'm able to pick up money when the market's down. So I don't feel effect when the market's down. I'm not happy when the market's down. I would love that the market's up, but I'm not effect because I'm making money even when the market's down. Make sense? So that's pretty cool. You know what I'm saying? And that's what I want people to learn, is to be a cause over the market, not effect of the market. Okay. So you look at Saylor, the company is always continuing to buy more Bitcoin. Charles, it's good to hear from you in the chat box. Thank you very much. And you look at 168 Bitcoin, it achieves Bitcoin yield of 26% year to date, now holds 640,000 Bitcoin. So they continue to acquire Bitcoin. They have not changed their strategy, no pun intended. They just continue to do it. This is going to be, this company is going to be hundreds of billions of dollars in terms of value. One day it'll be over $1 trillion. This I just know is going to happen. So MSTR is amplified Bitcoin, is what strategy says, and posted on October 21st. Keeping the faith there. The shareholders are not feeling that right now. We are not feeling strategy in that way in terms of a shareholder, but we will feel that again. Okay. So the idea here is that if Bitcoin moves, strategy amplifies that move, but that's not happening right now, as we know. So when the sentiment returns, my thesis is that we'll see the MNAV move again. We'll see MSTR amplify that move. But when Bitcoin's down or the sentiment is bearish in the market, then strategy moves aggressively in the other direction, which is not the direction that we like, right? So there you have it, okay? So again, very important on this, not this point. When Bitcoin rises, strategy typically climbs faster, but that's not happening now. When Bitcoin dips, strategy falls harder. That is a true statement right now, okay? So we shall see, and I am continuing to hold my strategy. I'll say that over and over again, just so everybody knows. And here's what happens when you put Bitcoin on a balance sheet and compare them against the cash balance of the Mag 7. The Mag 7 is like Apple, Microsoft, Alphabet, Amazon, NVIDIA. If you look at this chart right now, Strategy's got like $72 billion in their treasury. Apple's got 120 something. You got Microsoft almost cracking 100 billion. Same thing with Alphabet. So strategy for a smaller company, way smaller, their treasury is massive with Bitcoin, massive. One day they shall have $1 trillion treasury, in my viewpoint. Okay. So, let's say Bitcoin grows at a modest 25% compound annual growth rate. I think it's going to grow more than that. If you've seen any of Saylor's videos in the past, he talks about strategy and he talks about Bitcoin. He talks about if Bitcoin grows at a 29% compound annual growth rate for the next 20 years, in 2046, you will see Bitcoin at $21 million, a $21 million Bitcoin. I think he's putting the boldest prediction out there. And that sounds like a really big number. I'm not saying that's going to happen. I do think we'll get to $1 million Bitcoin. And that to me is a layup, and that's in the bank at some point in the future. Definitely not this year, but at some point in the future. Maybe it's 5 years, 6 years, 7 years, 8 years, right? I do think one day Bitcoin could hit $10 billion. But when you look at Saylor's perspective of like Bitcoin growing 29% a year for the next 20 years, the S&P is growing 14%. So to think that Bitcoin couldn't do 29%, I do think that Bitcoin could do 29% a year. And even if Bitcoin does 25% a year, like do the math and look at what Bitcoin would be at in 20 years. You're talking about a massive number. So Saylor's initial prediction was $13 million Bitcoin, saying every Bitcoin you don't own now costs you $13 million. So think about that, okay? And again, this is all hypothetical prophecies, the future. But when you look at corporate cash, the smart move was putting Bitcoin on the balance sheet because corporate cash is depreciating at least 6% per year, You're getting crushed with inflation and the erosion of the dollar. All right. So anything that you hear on the news, by the way, also another thing, like when you hear stuff on the news that talks about inflation being 3%, it's not that they're not telling you the truth. They're just not giving you the whole story. All right. And if you want to know more about inflation and asset inflation, again, the greatest thing that you can do for me, where I can help you is actually go get my book. It's free. I'm giving it away for free until it comes out as hard copy, which will be soon. But now you can get the digital copy for free because I want to pass on knowledge and wisdom for people. If you want to subscribe and like to the channel, that's great too. But my goal is to really get people to get the knowledge and data that they can, and specifically in sequence, which this book does. And it talks about inflation. Also, my trading strategy you'll get as well on how I'm making 5% a week. But the main thing is that most people don't understand asset inflation. And so when you see these numbers here, again, down below, you can get the book for free. But when you see these numbers here and you look at that 6% is actually conservative on inflation numbers, like corporate treasuries, their dollars are eroding at 6%. That's because on the news, when you hear Powell come on, it's like, yeah, inflation is at 3%, but it doesn't take into account asset inflation. And so you really need to look at the increase in assets over time. And so, for example, the increase in home value is not in the CPI, the consumer price index. That whole index that says, hey, we got a basket of goods and services here, and we weight those baskets of goods and services, and inflation, the price of these goods and services is only going up at 3% per year. That only tells part of the story. Homes are not in there in terms of the increase in value. So when you go look at the houses over the last decade and what they've increased on average, it's way more than 3%. What's also not in there is college tuitions. College tuitions are weighted such a small point of it. Board, tuition, books. Like there's much more of a cost to college tuition, not to mention the money printing that goes into place to push these loans out to these kids that could then afford college. And all that money is in these kids' pockets, chasing after too few schools, pushing up the demand, pushing up the prices. And now you have inflation of schools and price of schools. So inflation ain't 3%. I got news for you. So when you are calculating your rates of return, which is why this datum of strategy, let's say Bitcoin grows at 25% per year over the next 20 years. Maybe it grows at 29% like Saylor says it's going to do, right? I think over the next 4 or 5 years, we're going to see way more than a 25% compound annual growth rate. But I'm talking about over the long run. You have to do that to win. Because if you're just doing the S&P 500 and you're factoring on the S&P 500, I'm making 12% a year. Let's say you're even making 14% in the S&P 500. By the way, the S&P 500 is up 10% to date. So this is like we're in November right now. That ain't so good, man. You factor in inflation and the CPI number that they give you, asset inflation, add another 3% or 2%. That's now 5%. take your 14% return and minus out 5, now you're at 9%. Factor in management fees, take out another 1% if you have management fees. Factor in taxes, that's another 2% or 3%. So now all of a sudden your 14% is down to like 5%. You know, that ain't good. Okay. So the debasement of money, the printing of money, it worked, my friends, for the percentage of the population who was holding stocks and holding houses at the time, because your stocks went up during COVID, your houses went up during COVID, but the money supply got debased because there was 40% more money in supply. So it looks like your house is going up in value, and it is on paper. It looks like your stocks are going up in value and is on paper, but there's so much more money in existence that your money doesn't buy what it used to be, which is why so many people are struggling right now. So you can say the balance sheets are up, which I'll show you some data on this. And Tom Lee even talks about the balance sheets of the US are up, with homes are up, stock prices are up. Yeah. But let's also take into account the fact that there's 40% more money printed in 2021 and 2022, or 2020, 2021, I should say, almost 40%. That crushes the value of the dollar. Okay. So this is real stuff we need to look at. You can't just be looking at 10, 12% rates of return. You literally won't survive in terms of finance. All right. So that 6% is actually conservative on inflation, as I was talking. Again, go get the book down below because it'll explain everything. But by year 15, we could have strategy sitting with $2 trillion in terms of the valuation of their treasury. And this assumes they never buy another Bitcoin. You just look at compounding annual growth rate being much, much better than the S&P 500 of Bitcoin, and strategy would be a couple $1 trillion company. Okay. So pretty interesting, right? Now we're going to get into BMNR right now. Somebody's saying they're not really sold on BMNR, but I have bags of MSTR. Let's get into BMNR right now. Okay. In a small interview, Tom Lee shared something very powerful long-term. Now this is long-term. I'm going to repeat this again, long-term. Okay. He talks about, if gold's price increases, Bitcoin and Ethereum will also follow. So when gold reaches $5,000, which is not far away from that, gold hit like $4,300 the other day, and then it dropped. Bitcoin has the potential to reach a value of $1.6 million to $2 million. Time frame is more around 5 years, 6 years longer. Make sense? Okay. So this is how Fundstrat predicts Ethereum's price target in 5 to 6 years. If you hear them throwing around ETH price targets for $60,000, they're talking about that in relation to gold going up. And of course, we have a longer time period now of 5 to 6 years where that would happen. So when you hear him say, yeah, Ethereum could go to 60,000, he is not talking about it in this cycle. If you hear Tom talk about a $10,000 Ethereum, he is talking about it in this cycle. He's even talked about a $12,000 Ethereum, but this cycle could be the next 2 months. It could go into 2026. And that's the big question on people's minds. Will we continue the 4-year cycle like we have in the past with Bitcoin? And there's many analysts that are talking about now that we're not. This is a different type of cycle. You have institution money involved. It's a different game. You have so much of the buying of Bitcoin and Ethereum right now happening from corporations who are putting on their balance sheet, ETFs. It is a different environment. It's not retail as much anymore as it used to be in terms of the ratio in 2020 and 2021. It's now institutions flowing in. So you have a different market, a different game, and potentially a different cycle. I, on the other hand, don't know if we will have, if this will be a 4-year cycle or if it's a different cycle. I don't know that. So I don't have a crystal ball on it. And I do think we're going to have a good fourth quarter in the last 2 months of the year, because 1 month of the fourth quarter is over and it has not been good at all. Right? We're sitting here looking at October like, what happened to our October? It's no longer October. It's like Depression-tober right now, right? But we got 1 more week left. Let's see what happens. We got big news coming up that I'm going to show you in a second of what's happening at the end of October. And let's keep the optimism on this, but also, be smart about what you're doing, okay? So Tom Lee's still buying the dip. If you know anything about BMNR, I've been talking about BMNR on this channel for 3 months now. To me, it is the next MSTR. When I get a knowing on things, when I have a knowing on things for my portfolio, I pick right. And I was right on MSTR when I started buying at $78. I was right on Bitcoin when I started buying at $3,000. I was right on Tesla when I started buying it a decade ago. So I was right. And I continue, when I get a strong knowing on something, I research it. And I have a very, very strong feeling about BMNR. Now, again, Everybody's in a different situation. My future and how I invest is for me. And this is not financial advice for anybody here. I just want to give you data so you learn about a company that I think is extremely intelligent and is going to have a bright future. Okay. So when you look at BMNR and those of you who are MSTR fans, it's really important to understand BMNR too. It just is, because you're looking at a kind of in a good way, a copycat of MSTR. And hats off again. I'll always take hats off to Saylor for paving the way. It's not easy for a leader to go, I'm going to go all in on this, and the amount of whatever he took from this, whether it was good news or bad news, he took from doing strategy and putting Bitcoin on the balance sheet. He was the first mover in terms of a corporation, and so you got to take hats off to Saylor as the ultimate leader, and then Tom Lee as a leader as well, following in his footsteps with the playbook, but just doing it with Ethereum. And so now when you look at the number of tokens that BMNR has, 3.24 million tokens, and total crypto and cash holdings of 13.4 billion. On any given day, this changes because the value of Ethereum could change. But you look at October 20th, these numbers, they were holding 3,236,000 ETH at a price point of 4,022, 192 Bitcoin, 119 million of orbs. Orbs is a really interesting technology. The reason why is because there's a company called 8Co that partnered up with orbs. And so when you look at this technology that Sam Altman created, it basically will scan your iris to make sure that you're an actual human. And so pretty soon on the blockchain and on planet Earth, because of so much AI, you want to make sure that you're doing business with somebody or sending money to somebody who's a real human. And the only way to verify that will be to have a verification process that's legit. And so something that scans your iris, it scans your iris. You go get your iris scanned. It literally goes into your phone as a code. So like your identity is protected because it kind of disappears. Nobody can duplicate the iris. It then becomes a code. And then every time you go onto the blockchain, that code is recognized that you're a real person. And then you're dealing with a real person. So this technology is freaking brilliant. I haven't researched it enough to be like investing in it, but I do think it's a brilliant technology and it's going to be sorely needed. And already is sorely needed. And there's 17 million people have already gotten their iris scanned as a result of this organization. So I think it's known as WorldCoin. Fact check me on it. And then it changed to World, and now it's switching. Its ticker is Orbs, ORBS. So when you want to go look it up on the stock market on the ticker, Orbs, it's ORBS, and that's 8Co, the company 8Co, that is holding. 8Co rebranded to Orbs, and it holds WorldCoin. So let me correct myself. So you have 8Co is the company that put WorldCoin on their balance sheet. Okay. And WorldCoin is the technology, Sam Altman's technology, that scans the iris. And so 8Co, much like Strategy puts Bitcoin on their balance sheet, or BMNR puts Ethereum on their balance sheet, you have 8Co, which is now Orbs. That's their stock ticker. And so they now put WorldCoin on their balance sheet. So two separate things, but they are now in their treasury putting WorldCoin in their treasury. Okay. And WorldCoin is the technology that scans the iris to make the blockchain more safe. Okay. And 17 million people have done that already, which is cool. So it's spreading already. So when you look at the treasury, all of this to say $13.4 billion treasury for BMNR. If you look at the price per share, this is as of the other day. On Friday, it closed at $50, but this slide's like a day old. Or 2 days old. The ETH price at 3,875. Today's ETH price is trading at 3,932. And the net asset value per share of BMNR is $36.79. Now, if you look at the MNAV relative to other MNAV companies, Strategy's MNAV used to be over 2. Strategy's like 1.2 or lower right now. The MNAV of BMNR is 1.334. So their MNAV has been consistent over the last several months, trading around 1.3-ish. So their stock is trading at a 30% premium to the net asset value of their Ethereum. Okay. Most of their balance sheet is Ethereum. You saw some Bitcoin and cash and stuff on there, but they continue to buy the dip. Okay. So just when everyone thought the buying spree was done, they go in, he does it again. He buys another massive stack of Ethereum. This happened earlier in the week, just catching up on the week, 250 million Ethereum, and he keeps acquiring. Now you look at a BitMine. They now have another name for BMNR is BitMine, right? So BMNR is the ticker, and then BitMine Technologies is the name of the company. So when you look at BMNR, they now own 2.7 something % of the supply of Ethereum. So when you look at the acceleration and the buying of Ethereum by BMNR, they are gobbling up Ethereum at a 10 times faster rate, more than 10 times faster rate than Strategy gobbled up Bitcoin. So probably in early 2026, we will see Tom Lee's company BMNR get to 5% of the supply of Ethereum. It's real that they could do that. They're already at 2.7% in less than 4 months. That's insane. So Tom Lee has Wall Street on his side. Ethereum is, I'll give you some stuff on Ethereum here in a moment that just gives you some facts and data so you can make your assessment. Is Ethereum still going to be around? Is Ethereum dead? Wall Street does not think so. Wall Street thinks Ethereum is very much alive. So Tom Lee isn't slowing down. Bitcoin continues to, BitMine continues to expand its Ethereum footprint, reinforcing its goal of capturing 5% of ETH supply. They will definitely get there. It is a layup, man. It's going to be a layup for them to get there. So this is why competitors struggle to keep up with BMNR. From July to October, if you look at this, as Colin put out this post. If you put this in perspective, I'm going to give you some slides here so it makes it easier so you don't have to squint while you're reading. At the current rate, BitMine is, I'm always like, Bitcoin. BitMine is accumulating roughly 31,700 Ethereum per day. That's a lot of Ethereum, man. That's close to 964,000 Ethereum every single month. If a competitor wanted to match BitMine, even at just $4,000 per ETH, where they buy ETH at 4Gs, they'd need to spend around $126 million per day. $126 million per day, okay? So I love this stock. I love what Tom Lee's doing. That's how far ahead BitMine is. They are literally crushing the game. It's why I trade this stock. I trade this stock because it has the volatility. So when you look at it in terms of the amount of trading volume per day, Strategy and BitMine trade over $3 billion in a day. They're the top 30 in terms of most traded stocks in the marketplace. And look at their size. Their size is so much smaller, but their treasuries are growing so fast and people are trading it. So when I trade BitMine, that's where I'm making 5% per week, last 14 out of 15 weeks. So right when BitMine came out, I jumped on it pretty recently after it came out and I started trading the stock. And so I've been profitable trading it 14 out of 15 weeks with an average of 5% per week. So when you see the stock being volatile, I remember in August, I think it was August or September, BitMine went all the way down to 40 and I was trading it every single day. And the thing is, when you're trading and you're trading the stock and then you're picking up, 5% a week per se with the trading money, because my trading money doesn't change, right? I trade the same amount of money every single week. So I'm still picking up 5%, but when I'm picking up 5% at a $40 price point, that means I'm picking up way more shares. And then when it turbocharges back up, I just picked up a whole bunch of shares down at $40, $45, $50, etc. And the wild thing is, I just decided when BitMine was up and on a run 3 months ago, I got in and I bought in at 60. So I didn't buy in at a good price like a lot of people have bought in. I have one of my students in my trading course that he bought in at like $45. And I started talking about this 3 months ago. Now I bought at varying price points, but let's just say my average was about $60 price point, but I then traded it down to where now my average cost per BMNR is like $46 because I've traded so much and picked up so much more shares. Make sense? So trading can win the game. For me, it's not just about long-term investing. It's about how do I make income every single day, even when the stock market's going down. Now, income relative to me taking that income and buying more shares in stocks that I believe in. Make sense? Okay. So all of that, again, if you want to go snag my book, Money Game, I talk a little bit about my trading, but I'll send you out a free video on how I'm trading. And you can watch the free video. Okay. Cheers. So BitMine is a great stock in my opinion. I love trading it. It is not unreal at all for me to pick up 5% per week. And when I say 5% per week, I'm understating it. And here's the reason why Tom Lee thinks we're still in a bull market, which is interesting perspective here. So let's take a look at it. Okay. So the first place to start is why the investment outlook looks better now than it did the start of the year. So this is probably news to people going like, what the hell are you talking about? The investment outlook doesn't look good. We're in a shitstorm right now. But this is some good, interesting data. And Fundstrat is another company of Tom Lee. They do a tremendous amount of research. Tom Lee has been right about a lot of stuff, so he's a trusted voice. And so when he gives out research, I pay attention to the research. S&P 500 is healthy. 10% year to date. So we're going into November. 10% is basically like you're dying financially, in my opinion. Okay. Well, not opinion, just statistically. Taxes, inflation, asset inflation, management fees. You can't win at 10% a year. Okay. So when you look at the S&P, the S&P is healthy by its standards, where it's not down 10%, it's up 10%. So we measure this to just take a look at the overall effect of the economy, not to say that 10% is good in my viewpoint. Okay. So the S&P 500 is up a healthy 10% year to date. Maybe they end at 12%, 14%, who knows, right? Back in February, markets began a sharp drop, what turned into a waterfall decline by April. So remember, the tariffs happened. We're like, oh my God, this is terrible. It was a nightmare for everybody. I did not sell during that time. I held on to my strategy. I held on to my positions. I was not selling out of fear at all during that time. And then we went all the way down, and then we shot all the way back up. So we saw this waterfall decline. And many investors panicked, sold at the bottom, believing it was the start of something worse. But the data said otherwise. As long as recession isn't forming, and this is Tom Lee's basic words paraphrasing, a waterfall decline often leads to a reciprocal recovery. And that's exactly what played out. The market didn't collapse, it reset. So Tom Lee continues to believe we're in for a strong Q4. And this is about, the recording of this is about whatever, not recent on the S&P. The S&P might be up or down a little bit more. It's about a month ago in terms of the 10%, but he continues to believe we're in for a strong Q4, and the S&P 500 could easily reach 6,800 to 6,900. He even said in a recent interview, 7,000. Okay. And this is current data on a recent interview that he said 7,000. And in a recent interview talked about the S&P 500. And he also said there's several reasons behind this optimism. So let's take a look at it. Corporate profits are strong. So when you look at the S&P 500, the estimate for the share price for all the companies, if you take all 500 companies, you average them out together in terms of the earnings per share, it's $325 there. Okay. And then if you look at that's an estimate for 2026, and then the estimate for 2027 is $360. So I was looking at corporate profits being strong for the S&P 500 companies that are in that basket. He also talks about the U.S. households' balance sheets being strong. I think my personal viewpoint is the balance sheet might look strong because houses are up and investments are up overall, but you also have to look at money printing and inflation and the negative effects of that. So while the numbers are up, the numbers aren't exactly what they say to be when you take into account inflation, right? And then you have AI spending visibility, which basically means a lot of money is being invested into AI. You can see this, and a lot of money is being invested into the creation of AI companies, the data infrastructure for AI as well. And also a lot of, big percentage of our economy, which is relying upon the technology sector. AI is starting to become a big part of our GDP in terms of the trend of how it's moving in terms of percentage of GDP. So AI is a dominant force that's, creating bullishness in the economy. And then you look at financial industry productivity gains from the blockchain, which basically means you have lots of movement onto the blockchain. If you watch any of my previous videos, you've got companies like PayPal have created their own stablecoin. They're on the blockchain. You've got BlackRock is now on the blockchain with their own money market fund. You've got companies like JP Morgan, Morgan Stanley, Deutsche Bank, all either building on the blockchain, testing on the blockchain. Swift, which is like a settlement layer that sends messages transfer from bank A to bank B. Swift is now building and testing on the blockchain. $11 trillion moves through the Swift channels. So Wall Street's going onto the blockchain, and that is bullish for Bitcoin and bullish for Ethereum because of the speed is one of the reasons why they're going onto the blockchain. Because, if you're Wall Street and you want to trade across borders in terms of dealing with customers, you're restricted. If you're a Schwab or a Fidelity, you're restricted to your local or geographic areas or your jurisdiction that legally allows you to get customers. The blockchain makes it borderless. So if you're a Schwab or a Fidelity or JP Morgan, I want to pick up 9 billion people on the planet, not just my small group of people that I'm picking up here in the US. So it opens up a whole new market. So why is Wall Street going there? Because of money. Speed, open 24/7, 365. And also, let's not forget the technology is better in terms of the settlement layer. So if I build a financial app on top of Ethereum and I'm JP Morgan, or let's say I'm BlackRock, that financial app on top of Ethereum, the settlement layer on Ethereum is going to settle in seconds. So if I'm using traditional banks and it takes 2 days to settle versus seconds to settle, where do you think the future is? This is just common sense. There's no way, no how on God's green earth that we ain't moving onto the blockchain, okay? If you want speed, if you want settlement faster, if financial companies want to pick up more clients, if you want a more secure technology, if you want companies to stop fudging transactions because it's immutable once it's on the blockchain, and if you want a network like Bitcoin that's decentralized, right, that's backed up by thousands and thousands and thousands of computers that all have a copy of, the Bitcoin network. If one computer goes down, the other one has the backup copy. Another 1,000 go down, another 10,000 have a backup copy. So this is a way more secure, decentralized environment that makes it a far superior technology that's out there. And we are out of the snail mail days of Wall Street, where trades settle in 2 days and where you sell stuff in 2 days, and we're into email. Like, boom, send a message in a split second, make a trade in a split second. That's the new world. And we're already here because large companies have moved there. So if that's not bullish for the future of the blockchain, I don't know what is, because that is. Now you look at something called the ISM, the Institute for Supply Management and Manufacturing Index, which basically means are companies and manufacturers making stuff, okay? Like this ISM, are they making more stuff? If they're making more stuff, there's a good demand for goods and services, right? So are they making more stuff? And when it's below 50, right, the ISM is still below 50 at 48.7. Let's break down what the hell this actually means. If you're not familiar with it, the ISM is the most widely used measure of manufacturing confidence. And this one number tells a powerful story, okay? Right now it's sitting at 48.7, which means it's still below 50. Every time the ISM dropped below 50, important data here, the S&P 500 entered what we call a mid-cycle acceleration. A mid-cycle acceleration. Markets went on to perform strongly after 2009, 2013, 2016, 2020. Each time the setup was bullish. So ISM trading below 50, goes above 50, right? This happened 2009, 2013, 2016, 2020. Each time the setup was bullish. We're in the same setup right now. So if you look at this for the S&P 500, it's good for the S&P 500. It starts going up. It's good indicator for what could happen in the crypto market. You've never been late cycle when the ISM is below 50. In fact, you've always been mid or early cycle. So right now, per this data, we are mid or early cycle, probably about mid cycle right now in terms of the bullishness for where we're going next. All right. Now, with all that said, you have to be very cautious. This is just data of the past. Anything could happen. Trump could announce 15 million tariffs on another country tomorrow, and then the markets could drop 50%. So you just always got to, anything can happen on this crazy planet, okay? So that's when markets have the best forward returns based on the data I just showed. 96% probability of a Fed rate cut at the next meeting on October 29th, and just a day later, a U.S.-China leadership summit. Two massive market-moving events back-to-back. So these are massive market-moving events. We could go up bullishly in one direction or down in another direction. So we shall see. All eyes and attention will be very much so on the U.S.-China leadership summit that's coming up, pending that Trump's still showing up. So latest news is hopefully he is. Okay, that's just that's not the news I got anywhere. I'm just like hoping he does show up, okay? If both deliver positive outcomes, it's the perfect two-punch. Fed stops tightening, liquidity returns in the market, U.S.-China relations ease, and confidence spikes. That would be a double good whammy, not bad whammy, okay? That means cash starts hunting for returns, and it could flow into tech stocks, crypto, which means Bitcoin, Ethereum, strategy, BMNR, and it could be a fun game. Okay, in closing here, we're going to talk about Ethereum. Again, if you want more data on Ethereum, BMNR, and all the basics on this stuff, go get my book down below, snag it. Ethereum is the crown jewel of this new cycle. Some analysts are calling it a current chart a textbook bull flag with a strong vertical move, the flagpole. That means the flagpole vertical move up, then a consolidation of the flag goes kind of sideways here, and then finally a breakout. So it plays out. The next target sits around 4,200, but that's just a technical story. Let's talk about fundamentals, because technicals are technicals, but we got to look at fundamentals. All right. So right now, there's about $34 billion in real world assets like real estate, stocks, and bonds are already tokenized on Ethereum. So when you think about tokenization, just think about it from this simple viewpoint. If I'm Apple stock and if let's say I'm a financial company like XYZ finance company, and I now want to tokenize, let's say, Apple stock, I'm going to wrap it up into a token. I'm going to put it on the Ethereum blockchain with some financial app that I've created built on top of Ethereum. And then I'm going to let people buy those tokens. And so those tokens, each token of Apple stock is backed by a share of Apple stock. That's how it works. So if I'm the finance company, I got to hold real Apple stock in my finance company, create tokens that represent the Apple stock, and then offer them up in the marketplace on the Ethereum blockchain, hence the word tokenization. So it's like I'm taking a stock, I'm wrapping it up in a nice little token, and I'm putting it on the damn Ethereum blockchain. I'm saying, buy this. Why would I do this? Because now people can buy it 24/7, 365. Make sense? So it's already happening. There's already companies that are doing this. BlackRock literally tokenized a money market fund. So they have a money market fund that's on the blockchain right now. I don't remember the name of it. Go look it up. Larry Fink's been talking about it on CNBC. And so now people can go buy their money market fund. Why was Larry like ear-to-ear smiles on this recently? Larry was ear-to-ear smiles because he's like, oh my God, now I can get clients putting money into our money market fund all across the world. All across the world. It's borderless now. Opens up a huge market for him. Okay. So in the next 12 months, that number is expected to hit $300 billion. That's nearly a 10x explosion in on-chain value. Now, if you wanted to amplify Ethereum's move, that's where BitMine comes in, BMNR, okay? The company is like the strategy of Ethereum, a corporate vault built almost entirely on ETH. For those of you who watched my show before, you know what this is, but some of you don't. So again, they hold 3.2 million ETH, worth roughly around 12.5 billion. I don't think it's quite 3% of Ethereum's total supply. It's like 2.75 or something right now. In just the last month, they've increased their stack by 34%. That's huge. And any move in Ethereum's price compounds into a much bigger gain in BMNR stock. So the stock's trading at a 34% premium right now. So if you see Ethereum go up, BitMine's likely going to take a move higher up with it. If you see Ethereum go down, BitMine's likely going to take a move higher down. Very similar to strategy. Okay. Analysts are putting a near-term price target between $70 and $80. Some even hint that triple digits could be on the table if this rally truly ignites. I do personally think that, I personally think that BitMine is going to go over $70 before the end of the year. It's trading right now at 50. I do think there is a real world if Bitcoin runs up, there is a real world where BitMine could hit over $100 as well. Okay. Finally, let's zoom out to the king, Bitcoin. Fascinating relationship between gold and Bitcoin. Gold usually moves first. So gold has been moving. Historically, gold moves and then Bitcoin moves. And there's a lag on its movement. It could be a couple month lag on its movement. So we will see. Gold's been on a huge run. If you saw people were like lined up outside stores trying to buy gold, last week I saw pictures of it, and then gold dropped 5%. And now whatever gold's price is, you got to take a look at it and see if it moved back up, because I did not see it recently. Okay. So let's see if Bitcoin catches up. And again, I showed you this model before, so I'm not going to repeat it. Some people still think, like Tom Lee holds that Bitcoin could hit $200,000 by the end of the year, especially if the Fed's liquidity wave kicks in as expected. I don't hold that viewpoint. I think it's a very bullish viewpoint, but we're looking already at October 25th. So unless something, if we get a tailwind coming in to push up, Bitcoin as a result of the Fed cutting interest rates, and if we see things go well with China and Trump, and then we start to see some more bullish sentiment in the market, I think Bitcoin could potentially go to $170,000 by the end of the year. 200,000, I think, is super bullish. And mind you, we're sitting at 111 right now. So one would be a 60% gain, and the other would be like an 80-something% gain with Tom Lee's prediction. So let's see what happens. And, the other side of this to be prepared for is we could go and extend into 2026, and we could chop for the rest of the year, and then maybe have a run up in 2026. We'll see. It's a whole new world out there. Be prepared. And I hope this serves you. Hope you enjoyed it. None of this is tax advice or financial advice. Do the right thing for yourself. Always do your research. get lots of different viewpoints out there in the marketplace, get lots of research, and make your own decisions for your own life and for your own goals. And I hope this serves you very, very well. Again, if you did not get my book yet, you can go down below and snag it. And then when you do get it, we'll be sending out this week a video of how I'm trading and making 5% on average per week with BMNR. I hope it serves you. I'll see you guys on the other side. You're fantastic. Keep the faith. And I'm wishing lots of prosperity for everybody's families over the next couple months. I hope things turn around, and I hope things go well for you. Stay well. Have a great rest of the day, and talk to you all soon.